Hello, everybody, and welcome to our investor breakfast. We have them every 2 weeks here online. I'm Bonnie Halper. I write the Startup One Stop newsletter with its editorial covering tech, and then always filled with useful links for founders and entrepreneurs and investors. And I work with founders and investors and make introductions and help you guys with your pitch decks when you need it, which you always need it, right? Right, Joe?
Sure.
Nobody knows how to write a pitch deck. But I want to thank, I'll post a link in the chat. And I want to thank Joseph for sponsoring us. Joseph, do you want to talk about what you do too?
Sure thing,
Sure.
Bonnie. Two Josephs.
Wrong Joseph. Wrong Joseph. Sorry.
I'm definitely
That's
call you Joe. Definitely calling you Joe. Which
That's okay. No problem. I knew Bonnie was talking about. Good morning, everyone. Thanks for joining us. Joseph Katz. I've been working with Bonnie now on and off for, what is it, 3 years, I guess.
Yeah.
So professionally, I'm a marketer. I've been working in the startup space. I help early stage companies go from unknown to well-known. I help them put go-to-market plans in place and sort of go back to the basics. And it's not just about the buzz of what's happening at the moment, but those smart marketing activities that'll help grow a business. So happy to chat offline with anyone that wants to discuss marketing in more detail, but great to be here. Thanks everyone for joining. And Joseph Chan, welcome. Thank you.
Thanks, guys.
Do you want to introduce yourself first, or do you want us to go around the room and have people
Uh,
you?
Why don't we go around and then I can talk about things if that's okay with everybody else.
Ian, you're up. And I've known Joe and I've known each other for years, by the way. He's very honest, very, very straightforward, which I've always appreciated. And he used to work on the dark side too. In tech. Anyway, Ian.
Okay, well, I'm Ian Garmaze in Toronto. I'm working with the Virtual Film School. So we're an online film school targeting influencers. Launching in March in Toronto.
Oh, wow. Good for you. David.
Hello, everybody. I'm David. I currently work for a technology company from the data side, and I'm really interested in the startup world as well as hearing their story. So saw the opportunity and I wanted to hear.
And always feel free to ask questions too. This is a very friendly forum, very approachable. Edwin, welcome and tell us about you. You're muted at the moment. Edwin? Sam, I know you're not shy. Muted, but not shy. I know Sam is on a plane right now. Oh.
Hi, Bonnie.
Oh, hi, Edwin.
Yeah. Hi, everyone. It's a pleasure to be here. My name is Samuel. I work for a payment startup in Nigeria. And I also work with Bonnie. I manage a group of entrepreneurs and startups at Tagify community. So it's a pleasure to be here.
And thank you for being here.
What's your last name, Sam?
Samuel Mbawike, Nigerian.
Can you put it down in the chat? That'd be great. Thanks.
So we do that. All right.
Oh, I know that Sam was on the plane, so his oh, Edwin, do you want to introduce yourself? Tell us a little bit about what you're working on. I know Sam will be back. Like I said, he's on the Wi-Fi on a plane to Los Angeles. Okay, Joe, take it away. Tell us about yourself, your background, what you invest in, what you look for.
Sure. Thanks, guys, for taking time out of your busy days. I'll go over kind of my background. Let me first preface it with saying I went to good schools, but I was kind of in the middle or left-hand side of the bell curve. So please be patient. I went to undergrad at University of Chicago, did a degree in economics, of course, liberal arts, didn't know what I was going to do. Promptly found myself working during the first dot-com boom in IT and tech in the Bay Area. So from 97 to about 2001, I did consulting, technical sales, product management. Nothing fantastic to write home about. Did give me a good background in tech. And then I went and back and got my MBA at Columbia Business School, did a degree in finance, and promptly switched over to the dark side, capital markets. So did derivative types work, structured credit and structured products in and around Wall Street for about 10 years. I did 8 years in New York and a couple of years in Hong Kong. Came back in 2014. Just felt like I wasn't adding a lot of value to the world. I always, and hopefully there are no ex-bankers here, but I always say, you know, bankers, if you take away their balance sheet and their Excel, they really don't have too many marketable skill sets. But anyways, started to transition to real estate, working there, and then investing in real estate, first residential and now primarily commercial real estate. So I do things like self-storage, mobile home parks, industrial cannabis is a decent sized position. Mostly invest in syndicates as an LP. And then in 2016, if I'm really honest with myself, it fell into angel investing, knock on wood. The first company I invested in is called Exern. I'll put it down in the chat. They still around. They're a no-code big data ML platform before AI and ML was a buzzword. This is in 2016. And now I'm pretty transparent about what I invest in. If you go to my LinkedIn, which I put on in the chat under the angel section, there's a Google Doc that shows all of my 103 portfolio companies listed in chronological order. Most of them are direct. I've obviously invested as an LP in syndicates. I've also run syndicates as a GP. I typically don't like running syndicates. Only I need kind of 4 conditions to run a syndicate. I need a large equity position in the company. I need to understand, you know, management and have known them for a while. I need them to ask me to raise, and I need to have friends and family who are, you know, interested in investing but can't do a $50,000 or $100,000 angel check. So I make it bite size, 5,000. Got a couple syndicates running on right now, but that's only because I have very high conviction on these companies. Out of the 103, I've only run 5 or 6 for the top companies. So I tend to be seed to Series A, B2B, North America focused. That's not a hard and fast rule. If you look through the portfolio list, you'll find some Australian companies, some Israeli companies. The exceptions are when I find geniuses or genius ideas. You know, I you know, sometimes I'll put in a little equity. I try not to do hardware. There's a couple in there. I try not to buy tech. There's also a couple in there, and I really try hard not to do direct consumer CPG stuff. Not because I don't think you can make money. It's just that I have no ability to handicap the consumer. And so that is kind of, you know, real estate's the core, that kind of cash flows. I run a bellwether portfolio, and I try to generate alpha through early stage tech. I do a little direct crypto, a little direct cannabis, and a little down market private equity, like sub 50 million enterprise value. Lately, you know, and so that's just been like a very normal kind of investing career. But the last, I would say, 12 months of my life have been pretty surreal. I had an opportunity to take a group of 17 folks to visit the royal families of Bhutan, Nepal, and Thailand through another business partner of mine. And this was in October. So had very high level meetings. Infrastructure, and when I say infrastructure, I mean clean, renewable infrastructure. So things like solar, waste to value. So think, you know, single-use plastics to diesel and that like. We do small-scale hydro, tire recycling, and liquid hydrogen are some of the projects we're looking at. So if anybody has a heart for kind of infrastructure, private equity type deals, you know, we're also, you know, always looking for capital partners. So I will say this, you know, I'm not the largest LP or investor, but I like to think that I punch above my check size. And I'll give you an example. The best example I can give is this trip. I you know, before some of you guys jumped on, I was talking to Bonnie and some of the other folks who were on early. I went to take one of my portfolio companies, a CEO, and his stories at the top. His name is Jalen Acosta, very interesting fellow. From the ages of 16 to 22, was homeless, slept on a park bench in Miami, got discovered, and then went on to sell millions of records worldwide. Essentially, at the end of his career, when he was waiting to collect all his royalties, found out that his manager had defrauded him via a split sheet you can think of as the cap table for music and the lyrics. So obviously didn't get paid any of that. Completely, destabilized his life. His girlfriend at the time left him, couldn't afford to take care of his daughter, newborn daughter, and he almost committed suicide. But fortunately turned himself around. So he's gone from the lows to the highs, back to the lows, and now he's back again with this split sheet and obviously a lot of momentum. And the timing couldn't be better. As I mentioned, Dubai is trying to be the next New York, and they have plenty of capital, but what they're missing is culture and A-list celebrities and things like that. And we came at the right time. And the beautiful thing about what we're talking about in music, it doesn't matter what color or what religion, what part of the world you come from. Every single culture has music and music in it of some form, shape, or form. And so, with AI and Web3, we're essentially transferring economics back to the IP holders, the creators, the brands, away from some of the middlemen and rent seekers who, quite frankly, for the last couple 100 years have been taking advantage of artists. So that is kind of the long and short of it. I'm happy to kind of dive in. I know it was a lot. I think that was pretty much it. But the last 12 months of my life has been very surreal and getting more and more interesting. So,
And yeah, you're such an active investor. Last time we spoke, you had just written your 101st check. Now you're up to 103.
yeah, I mean, look, like I said, I'm at the end of the day, I have a very eclectic mix in my portfolio, and my whole goal in life, I feel very blessed and grateful. I'm, great for you guys here. And I just try to meet people and add value. Because of my portfolio companies, I'll give an example. I have a company that is my largest angel position. It's a post-quantum cybersecurity company. And cybersecurity, as you know, touches every vertical. So I can go to almost anybody in a room and say, what do you do? Or what do you need? Or what are you interested in? And I can, somehow find value to add. And so because of that, I have very strong relationships with the CEOs that I'm direct to. And, I always tell people I have the best job on planet Earth. I go around because I'm not the smartest guy, but I find genius level guys who are doing the deepest technologies that won't be commercialized for 5 to 10 years. I put a little equity behind them and I push my entire network behind them. And then sometimes, great things happen. So, and I wish more angel investors would do that. And I wish people would think about like paying it forward more. I think that humanity and the investment culture would be a lot more positive. But yeah.
Sounds like you're more than just an angel investor, but more of a strategic investor with a lot.
Exactly. I was going to say, because he is an absolute connector.
Yeah, I mean, look, again, I firmly believe in this adage of my network is my net worth. And I try to, be a very, very long-term relationship type of person. I try to, say what I'm going to, do what I say I'm going to do, and stand by, things. Realizing that, angel investing is a very high risk, volatile type of, business. I fully realized that, I think out of the 103, I have 3 or 4 that have kind of defaulted thus far, but these are early stage seed companies. So, they could probably weather 5 years before they go bust, get a few funding rounds. We'll see. Definitely. I think the next 2 years, I'm of the opinion, obviously we're in a recession or a recessionary environment, and those who cannot really balance and get to cash flow break even, really run a risk of going sideways.
If you only had 3% of your companies fail, I'd say that's a huge success.
Well, yeah, I mean, look, well, ask me again in 10 years. I mean, a lot of these are, like I said, are early stage. So, they haven't had a chance. They haven't run out of cash yet.
But you've had exits as well.
Sorry. Yeah, I've had a few exits. Nothing where I could say, oh, I was first money in. I do believe the post-quantum cybersecurity, because of what's happening with China and some other nation states, it's become a matter of national security. So normally deep tech takes 5, 10, 20 years. But quantum is a matter of when, not a matter of if. And if you understand the size of the total addressable market, Public key infrastructure is RSA, AES, but they all run under the same basic protocol, right? It's a 200 integer prime number, and you have to figure out, is this 200 integer number a prime number or not? Now, the normal way to do that is just to try every combination, right? If I give you an integer on prime number under 100, you probably could factor that and figure out. But if you give you a 200 integer prime number or a number and try to factor every combination, you're going to be there for a while. In fact, IBM's Big Blue will take 10,000 years to kind of brute force every combination, right? That's the fastest conventional computer. But what people don't realize is every gain in a qubit, which is a 0 and 1, and the qubit is an exponential gain in compute function. So that quickly gets fast. And so I'm not smart enough to understand this, but the smart PhDs have kind of run the numbers, and they tell me it's like 4,100 qubit stabilized is enough to brute force even the strongest encryption. So it's whether you believe it's 4,100, 10,000, 20,000 qubits, existential risk is coming to public key infrastructure. And if you understand what, chips, everything from your phone to unmanned military drones to satellites have chips in them, and they all run some kind of security protocol, which is all predicated on this 60-year-old technology. So at some point, everybody will have to upgrade. And our good friend Joe Biden has just issued something called the Quantum Cybersecurity Act. I think it was passed a couple of weeks. You can Google, it's public domain knowledge. And that basically says all branches of the government, including the DoD, have 180 days to do a cybersecurity threat assessment, including quantum. And then you have 15 months to basically implement a post-quantum cybersecurity solution. Well, it turns out that doing quantum computing is actually hard mathematically. So outside of the 1,800 scientists in Beijing, China, who have dedicated $100 billion to build one of these things, there's less than about 500 PhDs in the entire world that can do that PhD level mathematics for both quantum and cybersecurity together. So it's not like you can just go to India or wherever and hire, a million full stack engineers. So you're very much supply side constrained. And so, those kind of conditions in my mind make for what I call a perfect storm. You have technology phase shift, a total addressable market in the trillions. You have nation states at war. You have the government mandating law. And they also just got what's called a phase 3 SBIR. So the SBIR is the DoD small business program. It's basically Space Force, Navy, Army. They allocate 3% of their budget annually. There are 3 phases. It's basically you get a grant and matching numbers. This is all public knowledge. You can look at it. SBIR is the acronym. So there are 160,000 in phase 1 and phase 2, but in phase 3 last year, only 15 companies made it. And this year we're one of 22. When you become a phase 3 contractor, you're a direct contractor to the DoD, no bid and no cap on the contracts. So you're literally a monopoly inside the DoD. So we think those are additive signals to the story.
Wow. We have 2 latecomers. I wanted to give them an opportunity to introduce themselves. They're both muted right now. John Mercer, would you like to introduce yourself? Tell us what you're working on.
Yeah, sure. Thanks. My name is John Mercer. I'm the executive director of Startup Bucks. We're a nonprofit in Bucks County that gets capital and community and resources to early stage startups in and around the county. We run a weekly forum that supports startups as well, called Founders 30. That goes beyond Bucks County, where anyone can present, but it's like a reverse pitch where they're actually asking the questions of the audience. And I owned a co-working business that I exited last year that was also in Bucks County in Doylestown called Stacks Co. And yeah, so growing the nonprofit, actually working on kind of a succession plan for that and looking at what might be next for me. Thanks, Bonnie.
Oh, sure. Would you want to put your LinkedIn?
Yeah, for sure.
Okay, thank you. And Sam, are you able to speak? I know you're muted right now.
Hi, Bonnie. Yeah, hi, Bonnie.
Oh, I meant the other Sam. Sam. Oh, I guess he's off again. Oh, the other Sam. Yeah, he's off again. I'm sorry about that. So, anybody have any questions?
Happy to take it. Also, go ahead, Ian.
Oh, the question is about doing business in Dubai and other countries in the region. So we currently have a prospect on the table in UAE. My boss was very negative about it. because he said, well, it's very hard to do business there. It's going to take forever to negotiate. And the pipeline to the money in our case wasn't clear. So how have you found it?
Yeah, I mean, look, I think everybody's experience is different. What I have heard is that there are a lot of fake sheiks and folks who say that they know the royal family. Everybody's trying to get, to the highest levels. The good and bad thing about the UAE is if you are, in the US, you have two sides, right? But in that country, if you're at the highest levels and they have buy-in and mind share, it just kind of gets done. And they have a lot of cash, no doubt. So I think there's a lot of noise and a lot of advisors. And I think depending if you're not, focused on something that's front of mind, obviously music and culture, we just happen to hit it perfectly where they're like, yeah, we're trying to, elevate the status of Dubai to New York or, any of the top tier cities. So it was very much aligned. And so, we kind of just shot to the front of the queue. But if you came and said, I'm going to do another social media company for the Middle East, you'd probably not get as much traction. So I really think it's, dependent on the situation. I found everybody to, when we're talking, to be very receptive. I think the key things in the Middle East to think about are what are they looking for? When you have, let's put it this way, more money than God, that another $1 billion is not interesting. What do you care about? You care about longevity, you care about food safety, you care about quality of life for your citizens, and quality of life means enhancing the culture and bringing people and making the region more of a global player. And so if you put it on with that lens and you say, oh, we are somehow a impact ESG company where we and where we can add value to the region, and instead of like saying, hey, come, with a hat in hand and saying, can please give us money? Because I think that tends to happen. Everybody just goes there and assumes like, oh, if I can just convince, the royal family that, this is a good idea, that they'll just get billions of dollars. And I don't think that's the way it works.
Oh, no, that's very helpful. And that's pretty much what I'm doing. I read a lot of the papers from the region, and that gives me some insight into what their objectives are societally, So yeah, thanks for that. And also I appreciate that link that you sent me, or you sent to the group, but you mentioned me.
Yeah. So
say something about that,
yeah. So again, another portfolio company of mine, Gaia House. I'll send a little video teaser. So the background on this, so I met this young gentleman, Max Louis. He is a aspiring artist and working with Jalen, who I also put the background in the thing. But more importantly, Max has reached through his influencer network to about 1.4 billion souls. So what he does is he's a coach to the top 300 TikTokers and Instagrammers. And during the pandemic, him and his good friends managed to TikTok and lip sync Shein, the fast fashion company, to $160 billion behemoth. And what they got for that was clothes. And then he thought himself, wait a minute, fast fashion is the #2 polluter behind oil and gas. And he's a vegan. He obviously wants to save the planet. He's like, I'm killing the planet, and all I got was clothes. So now he's like, I have this massive distribution reach through TikTok and Instagram. So I'm going to launch Gaia House. And Gaia House, you can think of as a marketplace for eco-sustainable brands. Not only will they have their own, but they'll have, any kind of mission aligned companies who want to do kind of a rev share. And so the first kind of bucket or checkbox was to go down to Dominican Republic. They have these things called influencer houses where they bring a bunch of these influencers and they TikTok about various things. And rather than, lip sync and dance about nonsensical stuff, go down and actually talk about, impactful NGOs and projects that are going on in these third world countries. The next stop will probably be Bhutan because we have relationships there. And what, I've learned is, and I'm sure you guys are well aware, these countries that heavily rely on tourism, the last 2 years because of COVID, nobody's been working. So the king in Bhutan used to support, so 50,000 people used to work in tourism out of 750,000 people. That's the population of Bhutan. So the king has been supporting these 50,000 families for the last 2 years. And so what he's realized is that's really draining a hole in the so-called sovereign wealth fund coffers, they also were not very sophisticated. They basically used it as a savings fund. They get money from the Indian government because what Bhutan has is they don't have very many natural resources. They have cheap running hydro. They have cannabis, which grows wild in the hills, which they should turn into some kind of clothing or paper product, just because the issue is they don't even have enough US dollars to buy cars because they import so much. The Indian government built 2 large hydro projects, which they pay, give them money for that electricity, and that kind of replenishes the sovereign wealth fund. But they really weren't investing that because they're like, oh, we just get an annuity. But because the king just lost a couple $100 million supporting 50,000 families over the last 2 years, no longer is the happiness index the main index temporarily. It's more about economics and how can we grow the sovereign wealth fund. So they need jobs, they need foreign direct investment, they need infrastructure, they need technology transfer. We have the relationships, we have technologies. I have another business partner. I like to think of him as my Indian financial MacGyver, this guy, and that's apologies if anybody's Indian, but I respect him, man, very much. He's grew up on the oil fields of the UAE. He's a electrical engineer by trade, ex Lehman Brothers and Bear Stearns banker, and he understands tax and tax incentives very well in the US. So all those solar credits, all these things that you're getting from the DOE, he understands them very well, and he likes to do structured deals, and so he can structure up almost any of these kind of renewable deals with huge tax incentives. So,
wow, that's very interesting. So I think we should definitely talk when when we have more time to get into.
Feel free to reach out. We can set up a call offline. I'm happy. I don't want to bore everybody with that, but yeah, happy to take the discussion. If you're interested in Guy House or getting involved, there's the teaser I put in there. There's a video that kind of explains what Max is trying to do. But any brands that are mission aligned, they're looking for corporate sponsorship, things like that.
I'll definitely check that out. Thank you.
Great.
Well, we have another latecomer who's identified him or herself as Jay. Jay, do you want to introduce yourself? You're muted right now. There you go.
Hello. Hi there. I'm Ian's friend. Thank you so much for
Hi.
spotting me. I feel very special this morning. I am a marketing consultant. I've also dabbled in entrepreneurship, but none of my ideas took off really. But I am a self-employed marketing consultant, and I have helped a lot of businesses scale. And Ian and I live in the same city, and sometimes we go to startup events together.
Very nice. Jay, could you put your full name down in the chat?
Yes, I will do that right now.
Great, thanks.
If you have any questions, feel free to ask. Oh, here's Tom. We have another latecomer. I'll have Tom introduce himself as well. Take it away, Tom.
My name is Tom Kwak. I'm a data scientist at an insurtech company called CDC. Previously, I practiced medicine as a physician. After that, I did academic research. After that, I co-founded an insurtech company using machine learning AI for business outcomes. And a year ago, we were acquired by CCC, and that's how I ended up.
Well, are you working on?
Congratulations.
Yes.
Yes.
Are you working on your next one yet?
I'm definitely like I'm like working on like getting a new.
I'm pushing him.
Yes.
Bonnie.
Data sciences are very, very in vogue, so I'm sure you won't have a problem.
Yeah, definitely. It's a good time.
Well, I know you got here late, but if you have any questions, please feel free to ask.
I'd like to ask a question to the group, and this is very much on topic, is what do people think about AI? And I think it's incredible, but also the ramifications that come along with AI potentially, or actually, I'm very confident it will displace millions of jobs in the next 1 to 5 years.
Yeah, we've had some conversation about that in this group, previous guests. And I guess, I mean, I'm also enthusiastic about it, but I'm also somewhat skeptical. I think there's a kind of a hype factor, which is kind of inevitable in Silicon Valley, which is being exploited heavily here. And I'm being a little bit cautious about it. I know there are real benefits to some of these techniques, but I think that there's some of the forecasts may be overblown. That's my take on it. And been working with AI connected entrepreneurs for a long time.
Amazing.
I wrote about it again in this week's newsletter. And it's funny, I saw a post this morning. I wonder if I still have it. I don't know. But somebody mentioned or noted that the programmers who are working with ChatGPT all have a certain political bias, and they've been biasing ChatGPT towards that too. And cited an example. And that was a concern of mine even before I saw that tweet posted.
I think it's going to cause a lot of disruption, but like every other new technology, it just means the jobs are going to change, right? Evolve. The web came out, everyone thought, the world is going to change overnight. There's new jobs created. So kind of
to change a lot of things. Another thing I wanted to note is that there is ChatGPT and other generative AI scraping the web. And they're not giving, whenever I write my newsletter and I'm citing an article, I always give credit to the original article. They're not footnoting, they're not citing. And what happens when, and there's a lot of plagiarism going on, we know that. And what happens when AI starts plagiarizing AI?
Yeah, that is true.
Oh,
Go ahead, Jessica.
Sorry, I have a concern, or I guess curiosity. Every time I speak to a guy who owns a business in AI, or any employees of a company based on AI, they're always in production. Like they're always in the process of they're still working out the kinks. And it's like we've had AI for like at least 10 years now. And so is it going to be another one of those things where you get in, you make some fast money, but it never truly turns into an independent, reliable tool that we can build the future on? Because right now it's still yet to be finished. Like there's still discoveries on what AI could actually do, and it's been years.
I would say that AI is still in its infancy. I mean, I was just watching the guy from DeepMinds who really, I think, was pushing that forward. Before everybody had tried AI and that, they were using kind of different types of approach. Now that they have these kind of big, large neural networks and large language models, it's just about, the AI has gotten better because the processing speed and the amount of data that we're able to run through it and these algorithms. I luckily or unluckily invest at the frontiers of robotics, AI, distributed compute. And whether you believe this or not, the capability to get to a Terminator type like situation, in my mind, is potentially there. You see Boston Dynamics has very capable robots. We know that the DoD has already, DARPA is one of the biggest backers of Boston Dynamics. So you can think about that. You can think about drones. You can think about, there's a Google's AI. What is it called? Lambda, right? The like very, very realistic. And they're working on with robots to even make kind of human expressions, right? So you combine all that together. I'm of the opinion, and maybe this is controversial, but when we put that first pacemaker into the first human, we kind of made that first step towards, cyber genetics, or, however you want to call it. We see what Elon's doing at Neuralink, and there's a lot of money going into kind of this idea of controlling things with your mind. And I think we're not far off from integration with robots. And we have already started. If you look at some of the people who have lost limbs and now the advancement they're making with robotic limbs.
Well, isn't transhumanism on the agenda? Isn't that the idea?
I think so. I mean, look, if you think about the cell phone, right, this is kind of like the last thing that, the next step is, getting integrated with the chip in your brain, right, and being able to pull it up right directly to the internet. Now, that's very Orwellian, Big Brother kind of thing. Everything that people have talked about is on the horizon.
I think that when Jessica, to your questions, the problem that indeed many AI ventures face is the last mile. So if you speak, like in autonomous cars, but we had the cars that can drive themselves for like some years, but cars that can do that accurately and safely are still not here. And that's a challenge because when we build AI models, we typically try to tackle the business logic and to get things accurately, where the business logic and what needs to be done is not always clear. So what I typically explain to like product stakeholders, etc., is that like building the model is the easy part. That's like a solved problem. Building an accurate model, that's a challenge, and it's a moving target sometimes. And by the way, the human beings that do this work and the things that I do are typically about like automation, etc. They are also not accurate when we measure them. But when we work with humans, then we accept it as is. I mean, like that's the employees that you have, so that's the accuracy level that you are content with. But with models, we always judge them quantitatively. And that like last mile is an asymptotic, like we won't have like a leap for probably that solve it once and for all. This is also related to the ChatGPT and large language model in general. They are like a very impressive technology, but when they are actually being tested on concrete tasks, then they are not necessarily more accurate than like smaller specific models, and they are 100 times more expensive. And the reason is that when most people interact with ChatGPT, it's in interactive manner. So like you talk with a person, and typically we don't try to find the errors in whatever the person in front of us is saying, and we are more amenable to say, oh, this does. I mean, like this is actually help us. When we try to put these models, for example, when I did a formal evaluation of GPT-3 for like some like business problems, it was sometimes reasonably accurate, many times horribly inaccurate, and overall was not cost effective. So I think that the challenge now is how do we take this like very impressive technology and actually, as you said, make it a reliable thing, something that can actually solve a problem from A to Z rather than like a nice story. That's it.
Yeah. Yeah, there have been some interesting news reports about ChatGPT. I mean, one aspect is that Microsoft is heavily subsidizing the computational power behind it. So it's essentially a kind of like a, they're taking a big shot, big chance on it, but like the full cost of it is not even reflected yet. And the other factor is there's a human component to ChatGPT. It's not a fully automated tool. They have large teams of people in India and other countries who are filtering material from the web in order to make it suitable for use with ChatGPT. And that has not been highlighted. It was reported in Time magazine recently, but like many people are not fully aware of these factors, which need to be considered, right?
Yes.
I didn't even know that. Oh, go ahead, Tom, I'm sorry.
I said that this is a very good point, because when ChatGPT is compared to similar models from like other companies, for example, like Bloom from Meta, open source models, etc., it's really, really much better for various things. And it's not because the size of the model or the data set. It's because OpenAI invests a lot of resources into essentially supervising this model and training it, and so it won't be like easily available in the coming like months at least, and it's also like highly expensive and probably subsidized to a large expense. And that means that like when we try to build like a line of business solution using something like ChatGPT, then suddenly you run into cost. Hey, it's going to cost me $1,000 per query, so maybe I can't really use it like to solve like this business problem.
Very interesting. Well, listen, I as a human am very grateful that we live in such incredible times. We've learned more about ourselves in the last 100 years at a subatomic level and at the deepest reaches of space than we've learned in the millennia before. So it's never been a better time or a scarier time to be a human being, because our ability to both push ourselves forward and kill ourselves with things like gain of function and things like that. So I put down in the chat, here's another example. So there's the ability now, this is a Google Ventures backed company. It's called Fizna, and then they have another company called Fangs. So it's basically 3D object search. So it's not text search, it's 3D object search. So you have the ability to search for a desk or a chair, and they have over 15 million and growing kind of objects. So people who are doing that can now say, I want a brown chair, 5 feet high with, whatever, find that, turn that into a CAD file, and then you can ship that off to another portfolio company. So I'm not investing in Fizna, but I am investing in this company called Creative 3D Technologies out of Austin. These guys will print anything from food to titanium so different multi-substrates on the same printer, different nozzle heads, and the cost of the printer is less than $17,000. You won't find anything even close to that. So the ability to do just-in-time manufacturing, think of it as a 3D Kinko's for those who are old enough to remember what Kinko's was.
Yeah.
You can literally have, one of these in New York and one of these in Mumbai and start printing out your own specialty parts.
I do want to mention a few more points when we were talking about robotics. One, I know that Google acquired Boston Dynamics a few years back, as you recall. And two, the San Francisco Police Department are using robots, or plan to use robots as police officers. I shouldn't say auxiliary. And the debate was, should they allow them the ability to kill?
Wasn't there a movie about that, RoboCop?
Yeah, but like Joe said, it's an interesting time to be a bipedal sentient human.
Joseph, so you mentioned some of your activities in the Middle East and Bhutan. How about other parts of Asia, India, China? What are your thoughts there?
So I spent a couple years living in Hong Kong from 2012, 2014 working for a French investment bank. Hong Kong is no longer the same. You can consider that part of China.
Yeah.
We think that Taiwan in the next couple of years will, whether it be economically or physically, you'll see some kind of takeover from the mainland. All signs point to that just because of the aggression. And I'm very well politically connected through other friends in the Philippines, Indonesia in particular, and we have some good connectivity in Thailand, and then of course Bhutan and Nepal. So look, I think as far as growth, I think India and Indonesia have huge young workforces. I mean, everybody's making the India bet. I personally like Indonesia as well. As far as a lot of natural resources, young, growing workforce, relatively politically stable. Yeah, so that's But again, I try not to do stuff too much and get involved in politics. I find that's a rat's nest.
Yeah. But are you investing in China at all?
I am not. I'm Chinese by ancestry, but I am not. And in fact, because of my investment in that post-quantum cybersecurity company, they're very heavily involved with the 3-letter agencies, and so it would not look good optically to invest in any companies in China at this point, since our good friend Putin has basically shifted the geopolitical chessboard 90 degrees.
Right. Got it. Okay, thanks.
Not to say you can, and if you want to, I can put you in touch with folks who are investing and deploying capital. It's just a very sensitive time to be investing in that part of the world.
Yeah, we actually have a client in Beijing, so that's probably our most important.
Yeah, I have friends there, and I have friends. Yeah, I have not actively sought that out. There's plenty of money to be made there, but you kind of pick your battles, I think.
Right. Yeah, well, it sounds like you have a lot on your plate. So
yeah.
But the quantum cyber security. So could you say a little bit more about that?
Yeah, absolutely. Listen, I'll put the name of the company down in the chat. It's a company called Q Secure. If anybody's interested, just ping me after this. You can reach out on LinkedIn or in my email, put my email down here and say, hey, can you send me more stuff? I am running an SPV, on that. If folks are like, hey, that looks interesting, everybody put on their big boy due diligence pants and, I just provide material and then you decide for yourself.
Got it. Thanks.
So questions, anybody have a question?
I'll jump in with one.
Sure.
Joseph, you've invested over 100 companies in quite a short amount of time. What's your due diligence process? How do you vet these companies and founders, and how quickly do you go through that process?
Absolutely, that's a great question. So my whole MO in life is to have as many passive streams of income as possible, and I think diversification is kind of your last free lunch. So I always tell my founders this: listen, I'm going to come in usually for a small check, minimum check size, because I can't control the market. I can't control competition. I can't even control how you execute. All the shitty companies go to zero, and all the good companies or decent companies ask me for more money in 12 to 18 months. So in 12 to 18 months, if you're hitting your KPIs, you're sending me updates, and you're, reasonable people, then, I usually build a position around that. So I do my diligence, through a lot of, my own research. You're looking at kind of the CEO and the janitor. I don't run a big fund. I run my own capital. Depending on the areas, right? So some stuff I need like signaling. That's why I invest seed to Series A. Like I don't try to take pre-seed risk because, the ultimate kind of testimony, I think, in my mind is, can you build a product and then can you sell it and get people to pay for it, right? You got product market fit, right? And that's just not one customer, but you have a bunch of customers, right? And so that to me is some signaling. Does that mean that you're going to be successful? No, but at least I know you can assemble a team, you can build a product, you can ship a product. And, usually it's, talking to clients, talking to other investors. So it depends on the investment size, things like that. If I'm investing through a syndicate, obviously I'm heavily reliant on the GP of the syndicate. So that's less diligence as opposed to going direct. But, where I think there's, asymmetric risk, shall I say, I always tell people, look, I'm betting $1, could go to zero, but I'm playing for 100, 200, 300 times my money.
What is your average check size if there is such a thing?
I mean, look, to get directly on the cap table, it's somewhere between 25 and 100K is kind of, table stakes. I think that's minimum typically at where I'm investing. I've done smaller, I've done bigger. It really just depends on the situation, right? And if you're direct on the cap table or you're an LP in the syndicate.
And you do follow-on funding as well?
For my own stuff, yeah. I mean, when I have real conviction, that post-quantum cybersecurity company, I was first money in. They kind of bootstrapped it. They had an exit for a couple of years. So I invested at 12.75 million post, 16 million post, 27.5 million post. And this round is 150 million post. So I've been there the whole way, building a position, raised a bunch of money for them. Super close. The reason why I like investing in alternatives is because, these are private companies. So I get all kinds of information that normally wouldn't be available to folks in the public markets.
Where do you usually find your outliers? Where are you looking around? I'm just curious.
That's a great question. People are like, how do you get your deals? You seem to have good deal flow. I think I'm just lucky, but I define luck as opportunity meets hard work, right? I'm the guy that will go out at 2 a.m. to meet a founder for coffee, or I'll go, I don't sit in the ivory castle and wait for deal flow to come to me. I'll go to Bitcoin Miami. I'll go to, the Dubai, and I'll go to the Middle East to talk to people. And I kiss a lot of frogs to find the prince, so just churning in. I don't have access to all the deals, certainly I have a good network of folks who show me stuff in. I get, unsolicited email and LinkedIn like decks all the time. So I imagine like some of the other investors on this call. So I'm looking to scale that up. I'm, actually in the process of spinning up what I'd like to call a mini Berkshire Hathaway, because people have said, you should raise some money, do a venture fund. And I was like, why would I do that? I mean, if I do that, I have a 10-year commitment to my LPs. Right now, nobody tells me where to invest, when to invest, who to invest in, what asset class. So I kind of like that autonomy. And, I was like, who else kind of does this? And I was thinking, oh, you know what? Warren Buffett does this. He's basically a family office disguised as a large corporation, because he invests in real estate, he invests in options, he buys parts of companies, he buys whole companies, right? He basically has huge discretion. So if you want to follow that model, that's a much better model, in my opinion, than raising a fund with LPs, if you can do it.
You're just taking a lot more risk than he does, right? Because he's doing later stage businesses usually.
Yeah, I mean, look, again, risk is, how do you define risk, right? I mean, yes, I am taking earlier stage risk, and people would say that, but again, it's how you invest. I have a very diversified portfolio across a lot of bets. I'm not, just putting my eggs all in one basket. So it's a different type of investing, right? I think for me, for the size checks right, and the stage, I think the greatest risk reward is kind of that seed plus, because you're investing in companies usually sub 20, 25 million enterprise value. And if you hope that every single company that you invest in is $1 billion, why invest at the A range when that's like, 75 to 100 million? So I can maybe make 10 times my money, as opposed to, if I'm sub 20 million, I have a shot at, 50 times the money if I have, pro rata rights and stuff like that. So that's kind of the mental exercise that I think about. How big is the addressable market? How big could this company be? What is my upside from here?
So
That's
question,
why this, yeah, go ahead.
no, go ahead.
Well, that's why I don't invest in late stage like CD rounds. One, the check sizes are much larger than I, like I said, my bullets are not unlimited. And usually they have professional managers, and it's basically like a private equity play when you're doing that. And as you can see during the hype, a lot of these late stage funds, they piled a bunch of money into, companies at ridiculous valuations. And what happened? FTX blew up, and guess what? These guys are now trying to raise follow-on rounds at half of what they were raising at, 6 or 12 months ago. So, and the same thing has kind of happened, but less compression at the seed earlier stage, because it didn't get out of whack, right, so to speak. So we've still seen compression, right, but not to the same degree.
We won't even get into FTX because there were so many red flags on so many levels.
Yeah, thankfully I dodged that bullet. There's a lot of knock-on effects with, folks in Binance or not Binance, BlockFi, and a few of these other, companies that had got funding from Sam. So ironic. Everybody, I don't want to belabor the point, but everybody, I was like, wow, this guy's incredible. Like 12 months ago, like, all these companies blowing up, and he's like untouchable, right? Genius, but only to find out that the emperor has no clothes. So
Yeah, right. I was going to say it's a strange time in investing, and even in startups. So are there any verticals or anything in particular you're looking at or keeping an eye on these days?
I think we've talked about some of them. Cyber is a huge play, just because that is the third world war that's going online
Yep.
right now. I think AI is absolutely a massive opportunity. It's a whole new industry that's literally kind of come up in the last 10 years. So data is the new gold. That kind of goes hand in hand with AI. And I think, robotics is another hot one. I think we're going to need those folks. Whether you like it or not, it's kind of like that old adage, when people were driving horse-drawn buggies, they're like, oh, we'll just add some more horses. And Henry Ford's like, no, we should have a car, right? And we see what happened to the buggies, except unless you go to Central Park, right? So technology, whether you like it or not, AI, robotics, it's all here. The proverbial cat is out of the bag, I guess, or you're not putting that technology back. So how can you work with it, adopt it, profit from it? That's how I kind of think of it. Technology will keep moving forward, so you better get on the train.
Yes. Anybody else have a question? Ian, you always have a question.
Well, yeah, I'm the cyber in particular. I mean, there's been a lot of sort of negative comment about the opportunities in cyber recently, because they say some companies have been less likely to spend money than you might have expected, given the threats that you mentioned. But you seem to have a strong belief that there's
Well,
big
I
potential.
mean, the cyber market, when is the last time you've seen a cybersecurity budget go down? And two, I mean, you're protecting, it's a matter of national security. Joe Biden has
Right.
actually allocated money at the Commerce Department to pay for, the IRS, all these financial banks who can't, may not have the money in their OPEX budget because, these are real assets, right? We can't just let this like have, a nation state have the keys to the kingdom. So
Yeah.
I don't touch the rest of cyber. Cyber is such a massive market from an investor standpoint. I'm only looking at post-quantum cybersecurity, which is a very, very tight, like specialized region. And again, look, quantum computing, I don't care when the hardware actually comes online. I actually care about the threat, which is real, which is driving this it's a $1 trillion upgrade cycle in the US alone. So
Right. Yeah, interesting. I'll definitely be looking into that company for sure. There was a big presentation at a conference I went to about quantum. So I guess the consensus is it's just a few years before the hardware starts to become available.
I mean, IBM's already have 256 qubits stabilized. We have no idea what the Chinese have done. We think they're light years ahead of us because they've thrown an order of magnitude of money, and they have 3 times as many quantum scientists working on this problem. So they
Right.
could have the ability today. Nobody's like when SolarWinds, Colonial Pipeline, those guys were not like banging on the bell saying, "Hey, we hacked you." They didn't find out for 9 months later. So
Yeah.
nobody's going to realize until you've already been hacked whether
Right.
whether there's been a quantum attack.
Interesting. Okay. Well, thanks for that. Yeah. I think of what else. So what's the top priority for you this year? Like of all these different projects you're working on, which one is got you the most excited right now?
It's between the quantum cybersecurity and that company called Splitsheet. They don't have much up, but I can put like let me see if I can drop a 1-pager in here. Yeah, I'll throw a file on here. Let me see if I can't find this thing. But yeah, because the rest, if people are interested, you need an NDA for it. But I think it's super interesting just because of the impact. Essentially, what you're doing is you're disintermediating the big record labels, and you're putting economics. Like, here's my whole thesis on Web3. I think Web3 will be one of the largest transfers of economic wealth this generation has seen, from kind of the middlemen, rent seekers, back to the IP and the brand holders, right? And I'll tell you kind of what my simple use case is. So I put the Splitsheet things in here. Let's see if this will go. How do I send this? Is this thing gonna go? There, it's going. So that's kind of a 1-pager. People, here's the simple use case. And I found this thing in when this is the kind of like people ask me, how did you find this deal? I literally went to South by Southwest. I went to the Solana Hacker House. I sat down, and the guy sat down next to me. He's like, I have this startup for Web3. I was like, great, pitch me. Tell me what you do. So we collect things because why? We like to, we collect coins, we collect comic books, we collect stamps, collect art. And if you believe that the economics are now shifting because of Web3 and blockchain back to the IP creators, because here's the simple use case. I'm an artist, I'm a songwriter, whatever. I can write or paint an art painting once and sell it once, or I can create a digital NFT and get paid for perpetuity on the residual, right? And then these guys quickly realize, wait a minute, that's a better trade. So then they're like, okay, we're going to do that, right? And because we collect things, right? Things like I said, stamps, whatever. This guy's like, listen, I'm basically going to create and digitize the IP. This is going back also to Bhutan, right? Every country has this. They have the IP of a country. And what I mean by IP is like every country has a museum, a castle, artifacts from the 5th century, which will never be sold physically, but you can digitize that and you can say, listen, the Mona Lisa, the real one, worth $500 million, never be sold by the Louvre. But the one of 3, one of 5 official NFT from the Louvre somebody out there, some art collectors gonna be like, yeah, I want one of those. And it's not going to trade for $500 million, but it'll trade for some number. And every time it retrades, that money, half will go to my company, Iconic Moments, and the other half will go to the Louvre, right? And so traditionally, all these museums have been basically, you know, let's for lack of a better word, they've been asking for handouts from the city, state, private donors, right? Now some of this money that's coming back off of NFTs can be funneled back into OpEx, and so potentially they can bring down their funding gap, right? Or fill the whole thing. Now that's not going to be every museum, right? But it's an interesting time to do it. I'll pull up the URL for you guys who are interested in seeing it, but essentially it's called iconicmoments.co. There you go.
Well, the other aspect that occurs to me is like you have companies like Hypnosis that are taking in huge amounts of capital to buy back catalogs.
Absolutely. So I was just talking to a gentleman, his name is Russ Rieger. He was Madonna's manager for like 10 years. And he's like, listen, I'm buying a bunch of indie labels, right? He's buying them 7 times whatever the revenues, right? And he's growing them. And he's like, listen, none of these music execs, none of the artists are thinking about Web3. They're not thinking about merch in the right way. They're just artists, right? They're not business people. And this goes back to the split sheet thing, right? Imagine you're a very talented musician. You come out of high school and you're just amazing. You're the next Justin Bieber or Taylor Swift. You go to Sony Records and you say, give me a record deal. Who do you think is going to get the raw end of that deal? If you're going there, right? Do you have money to hire a top-notch lawyer? Do you know all the terms that, like you have no idea, you know how to play music. So on average, my friend Jalen, he was like, listen, when a music record gets, done with you, they take 88% of a song. So you're the IP creator, you're the brand, you own that. And to get that to market, they're going to take 88%. You're left with 12%. That you have to divide by your manager, which takes 20%. And then, however many band members. And then you pay taxes on that. Oh, and by the way, before you get any of that 12%, you're going to have to pay all the capital from the hotels, the road shows, the concerts. All that has to be paid back before you see a dime. So like I said, so out of all the musicians in the world, and by the way, they're like 100,000 songs loaded up to Spotify every day. The top 2,000 artists make 99% of the money on Spotify and YouTube. That's it, full stop. You do 5 million streams, you get $3,500 as an artist. What business do you know where 5 million people, walk into your store and you make $3,500?
Yeah.
Yeah, no, that's a great points. I'm gonna definitely take those. Thank you.
Yeah. So if people are interested in pushing the music economy forward, think about this. They estimate the music industry at 25 billion. They added up all the record labels. Do you know what Apple's market cap is today? It's about 2.3, 2.4 trillion. They do about 7% just through Apple Music alone. So you do the math on that, you're well north of 25 billion. Then you're not adding in all the songs off of TikTok, Instagram, YouTube, all these things. You add all that up, it's $1 trillion industry worldwide in real economic terms, right? And so we're looking to disrupt that.
Right. Yeah.
We had Jimmy Chamberlain as our guest investor and speaker a few months back. He's the drummer for Smashing Pumpkins, as I'm sure, and co-founder of Smashing Pumpkins. And they have cataloged everything since day one, every scrap of paper, and they want to turn them into NFTs. I should put you two in touch.
Sure. I mean, look, we're doing it another level deeper, right? Think about this. We're building an app at inception that you're going to put it on chain. So there's provenance. There's no disputing that this band at this time made this record, because if you issue a record today in the US, tomorrow could be playing in Zimbabwe, and then you would never know as a thing. And if somebody in Zimbabwe says, I like the music, but I'm going to put some Zimbabwean, I don't know what language they speak, whatever, on there, and that turns into a hit record, and then some commercial or movie licenses like 5 bars from that and snippets, and that plays in some movie that becomes a multi-billion-dollar movie, should you not be getting paid royalties on your music from that? But right now, the Performing Arts Music Rights Association, they have no idea. There's no way to track that. But by putting it on chain and actually putting a digital fingerprint, which is what we're working on, you have that ability, the ability to create a heat map and literally listen, because these things are always listening. Alexa, Siri, Shazam, the technology is there. So and then you think about, okay, what are we collecting? We're collecting massive amounts of data. So Tom will like that one because he's a data scientist.
I think that the question about these things with the rise of a generative artificial intelligence, like the ability to create images from a text, and now there's also creating songs, and videos are also starting to come into like animation. Do you think that there is that there will be like a disruptions of the entertainment industry? Because Netflix spends 50% on production, and maybe we can make it
I
all generative.
I think there is a potential where one day we have a movie. I mean, we have it in cartoons already, but where it's like photorealistic people and these actors don't exist. The problem is, I think, is that people still want to see these people in real life. They want to meet them. They want to have this affinity. They want to, see that they're real humans. Remember Max Headroom from MTV years ago? He was a
Yes.
celebrity, blah, blah, blah. I mean, but how long did that, he was good for the 80s or 90s, whenever he was around. I just think that you could do it once, you could do it a couple times. I just don't know if I think it'll be kind of in parallel, where Justin Bieber will have his avatar, where his avatar will be like, scaled to millions of people. They have that already, right? Deep fakes and whatever. And they kind of just train on Justin's kind of texting and his style. And then he just scales that, right? And that's a business. But I don't think you can have that alone without Justin Bieber, him, the human, right? Because people want to like see what he's doing in real life, right? Like they want to see his Instagram and all that. And it's very difficult to do that with a imaginary person. I think that's that human connection people want still. But could I see one or two, maybe kind of, Max Headroom the second or whatever? Potentially, very potentially. I mean, look, I don't understand it, but my kids watch people play video games, right? And the fact that you're watching people play video games is boggling to me. I played video games, which is fine, but watching people play video games is another level. I mean, like there's like, it's worse than like, I can think of no better time suck or waste of time than just watching people play video games. You're not even, if at least if you played video games, you might have a chance to become a pro video game player. But
some of those guys are influencers in their own right.
Yes, QP Pie,
Yeah.
look at him, like millions.
Yeah, there can only be one Cutie Pie though, out of the tens of millions. Like one guy's making a fortune, Mr. Beast, and all these guys, right? I mean, it's harder to be an influencer than it is to be a pro athlete, right? A successful influencer, let's put it that way. You earn a living, right? Very few people.
Fun conversation. Go ahead, I'm sorry.
You mentioned the ability to like sell content, etc., and those like YouTube channels. When you look into the numbers, then for example, like I watch a channel about like car upgrades. It's a person who take Teslas and put V8 engines inside them, and really good. And like you see that like the top like movie clips episodes reach like several million views, which is less than like top episodes of Netflix, which reach like 50-60 million views. But Netflix need to invest like millions in production, while these people only need an iPhone. So do you see like any kind of like investment mechanism that like we can invest in like YouTubers, and even though that they have like a lower revenue, they have like much lower expenses.
Cost.
So that, yeah.
Yeah. Oh, by the way, if you're a car guy, I'll throw down this one. This is a buddy of mine's Instagram profile. You can have a look at that. He makes one of one fastest production electric cars out of LA. So yes, there is actually a model. There's several companies. What they're doing is they are, I'll have to get the name for you, but what they're doing is they look at a kind of an influencer, say Mr. Beast, and they say, okay, you have this many followers and we project you're going to earn this much from YouTube. And so they're now saying, okay, we'll buy your Ford, we'll pay you up front for that. So Mr. Beast gets a cash infusion, and they have rights to X number of videos on there. So they're making some kind of bet there. But there are companies that are starting to do that with the biggest influencers, right? And essentially, you can think about this. The same thing can be said. It's a data play, right? For music, right? Let's imagine. So for Split Sheet, right? I'm an artist. You're an artist. We release we have similar social media following. We both release a song on the same day. with this heat map and this ability to listen in, I can tell, does Tom's song performing better than my song? Okay, Tom's got 100,000 people playing in New York City versus my 10,000. Now I can start to I can build a credit profile and start making microloans against Tom and all these people. So you're building a business, not only are you can make credit decisions around that. Here's another use case. Taylor Swift, she has tens of thousands of songs she's never published. Why? Because she doesn't have the marketing budget, or she wants to publish the top 12, right? Now she can put that all on our app and on chain and say, listen, here's a library of Taylor Swift songs. You want to sample the 15 that I never released? Great, maybe I do. And she's going to get paid for that, right? So you're able to monetize this, which I think is very interesting. So, what we're doing is not only we're shifting economics, but we're making the pie bigger.
Makes sense. Put my YouTube channel also in the chat. The person that made a Tesla with a V8 engine.
Is it called the long tail? Is that what it's called?
No, I was referring to what you were saying, about the long stream of revenues, deriving from these songs.
Yeah. I mean, look, that's essentially the guys, what somebody had mentioned earlier, people are buying, IP for, like, Justin Bieber just sold his for $200 million, right? The smart artists and the artists that can do are doing that, because Bieber is selling, takes a cash infusion. Now he's diversified. He's going to write more songs, and he'll sell that, that set for another $200 million in a few years, right? So there's all kinds of financial engineering going on with IP and whatnot. I think people who realize that in a Web3 world, IP and brand holders, that's the hard asset you want to hold and control, right?
Yeah.
Whether it's a sports team, whether it's a musician, whatever, you want to hold hard assets, especially in a 10% inflationary environment or whatever.
Right. Yeah.
Tesla, nice. Take a look at that later.
Yeah, me too.
Yeah.
I was going to say that when Web 1 first came out, the whole promise and the whole focus, or a big part of the focus, was disintermediation. And that all went away. I mean, we know that the bubble burst and that all went away, and we had the age of social. It's back. It's back. Maybe this is users in charge, or the people getting their shot, and not just giving up all IP to the larger companies and the larger brands. And
Web3 allows you to have provenance. It allows you to have data. It allows you to have audibility. It allows you to, again, self-publish. I think that, it eliminates essentially a lot of economics from the Sotheby's, the Christie's, the record labels, the houses, which were taking out, too much in my mind. Look, everybody needs to get paid, but 88% is egregious when the songwriter is the original IP creator, right? So hopefully some of these independent artists will be able to no longer be truly starving artists and make a living, right?
Yeah, I mean, there is a threat from quantum computing to the, encryption, which is inherent in Web3.
No, absolutely. Look, the quantum threat is not just for governments, not just for financial, but absolutely the chains themselves may be secure, but all the on-ramps to protocols, those guys have all vulnerabilities as well. These guys at QSecure did a deal with Unicrypt. Unicrypt does like a couple 100,000 wallets, something like that. So this is all, if you go to their website, it's all public domain knowledge. I think for Unicrypt is public. So. There's some, like, anybody who wants to dive, I don't want to really talk about it on a recorded session, but happy to have a call. There's certainly some interesting big moves going on that are not public yet.
oh, should we shut off the recording?
What's that?
You want to shut down the recording? I'm happy to.
I mean, look, if people want to talk about it, I can chit chat, but I just can't say anything on a recorded line or what's going on. But, like, people who are interested, like, that are like, hey, I'm thinking about, join the SPV, like, schedule some time and we can have a call. Happy to chat on that, at a deeper level. And I have a bunch of like emails which I can forward to folks who have interest. Just say, hey, I'm interested in QSecure. I'll send you a bunch of reading material, some homework.
Well, does anybody have a comment or a question they'd like to ask?
One thing one of the previous investors on this call mentioned that he organizes dinners in New York, regular dinners to meet entrepreneurs and other people. Have you ever thought of
Yes.
something like that?
Me, myself? No,
Yeah.
I'm too lazy. I like to, that requires work, right? I'm trying to be as passive as possible. Unfortunately, I have just too many irons in the fire. I join when people are like, oh, I'm putting it together, and I find that works out better because
Okay.
like I'll do friends dinners, but like
Yeah.
it doesn't really serve it doesn't add as much value for me given the kind of the work effort involved.
Right.
But I'm happy if Ian, if you're putting something together, or Bonnie to kind of tag along.
Yeah. Do you get out to LA very much?
I'm going to LA for the Grammys on Saturday, so I'll be
Okay.
there. Are you in LA, Ian?
I'm not, but my CEO is.
Okay.
I'd love to have you meet him at some point if you have time.
Sure. Which
Can I go to
for
LA?
which company?
Oh, at the
Are you-
virtual film school.
Oh, okay.
CEO is Frank Shindamo.
Yeah, if you want to do an email intro, I mean, we're pretty jam packed. Like we're only there for 3 or 4 days, but if there's time, happy to, if you can come up to LA near the Grammys, we can probably make that work.
Okay, well, I'll do the intro. Thanks.
Okay. If you're interested, okay, Ian, just drop me an email and just because otherwise when we close this out, I'm not going to remember who was
Oh, yeah,
interested.
I've got your email noted down.
Yep.
Oh, yeah.
Anybody who's interested, just be like, hey, I'm interested. Send me stuff on Q-Secure.
Oh,
Have you got? Yeah, go ahead.
I was going to say, if you don't mind speaking at one of the dinners, I can introduce you to David because he always has, not just entrepreneurs and investors, but guest speakers. He does them.
David Yakovich.
Yes.
I know David. I've been to
Right.
David's dinners. In fact, I think he's doing one with, do you know this guy from Fifi? His name is, what is his name? Thomas or something like that. He's got a dinner with First Republic and stuff. I think David's got a dinner coming up as well next week.
Yes, he does.
Yeah. Are you going to go to that?
I might go to that. What night is it?
Not sure. There's a guy named Theron McAuliffe. He runs a company called Fifi.co, but he also is with, I think, First Republic Bank. So he's teamed up with David and they're doing some kind of dinner series. So I'm going to one actually tonight that's with Theron. And I think David has a dinner, I want to say on the 8th or 9th or maybe the 16th, one of those days. Let me see. I think it's the 16th. I think so. Yeah. There's a founder dinner at Boqueria. So yeah, ping David and it's on the 16th at like 6:30 if you want to go in the city. Let me know, Bonnie, if you're going. I'll meet up with you.
Okay, thanks. Like I said, Joe knows everybody.
I know
Every name I've mentioned so far, even before the call started, he knew them too.
Well, I'm a pretty active investor in a sense that like I have a lot of portfolio companies and I talk to, there's a small, as you said, Bonnie, it's a small universe of people who are kind of super active and playing. There are angels who belong to angel groups and there are angels who just kind of cut one-off checks. And then there are guys who, I'm blessed to this is my full-time job is finding geniuses and putting a little capital behind them. So very, very privileged and lucky and blessed and grateful.
Appreciate you taking the time today.
Yeah.
No,
Yes, we
appreciate
really
it.
appreciate it.
Joseph, quick, do you have interest in VR and AR related technologies like that?
Yeah. So, I mean, I have a metaverse investment. It's called Super World. It's with a guy named Rish. I think Bonnie knows Rish. But basically, Rish Lotikar. Anyways, you'll see him there. It's an interesting company. So they do AR, VR stuff. And I think, look, that is the future. It's coming. Yeah. So happy to discuss that. What in particular was your kind of interest?
I mean, our company, we teach in VR, at least some of the time. But that's the way we're doing in Beijing. But the other fellow I wanted to mention, have you ever heard of Steve Mann? So
no, I haven't.
So Steve Mann he's considered to be the inventor of wearable computing. He's he PhD from MIT, teaches at U of T, University of Toronto.
Okay.
And I've worked with him on a few occasions. He's a little bit off like he's off the edge. Like a lot of people have had negative reactions to him, but if you're comfortable dealing with sort of mad professor types, I think he might be up your alley.
Mad professor.
Yeah, I'm not kidding. Like, believe me, he goes swimming in Lake Ontario every day, summer and winter.
Got it.
So, yeah, but he has like 25 patents. You know, he's attempted to license them. Some of them have been licensed. And he's somebody you might want to meet if you happen to be in Toronto, or he also is a associate professor at Stanford.
What is his kind of specialty? PhD?
Well, yeah, various elements of VR, AR, music. He's created several musical instruments which have been licensed to water parks. It's a water-based musical instrument. He's all over the internet. I mean, you can't miss him, you know, like
water parks. Okay.
Yeah,
So that's what's interesting.
He's Steve Mann. I'll type it. He's one of the most, I think he's the most creative person in Canada. That's my honest opinion.
Interesting. I like meeting geniuses. I never say no to introductions. I'll throw one more down. I'm sending a bunch of emails to you, Tom, by the way. Let's see. There's one more here that I like to talk about. This is if you're talking about what's my most fun investment, I have a investment in this company. It's called Surf Lakes, but it's a licensing play. These guys are out of Australia, so they built a full-size prototype in Northeast Australia, and now they've licensed it to a bunch of guys in Vegas, and so I'm invested in the Vegas project as well. So if you're talking about water, this guy would send that over to your friend. Is that Ian? Yeah. That's going to be a $4.5 billion project in Vegas. Going on
he's going to be all over that.
Yeah. So maybe he can do some music for the while we're surfing. That'd be sweet.
Yeah, very, very cool. And I'll send you some stuff about him as well.
Yeah, that'd be great. An intro would be great. Cool. Anybody else? I sent some stuff to Tom. I don't know who else is interested. Ian, if you want to just send me your email, it'd be great.
Yeah.
Bonnie, you want to also see the stuff for Q-Secure? Okay, great. And Tom, I sent that. Okay. I don't know. Anybody else? Tom, did you want? Oh, wait, did I send it to Tom? I did send it to Tom, I think. I sent it to you, Tom. Okay, got it. All right.
I'll put my email down.
Sure. Can you just drop me an email. I sent my email, put it back here again for people who came late, but send me an email and just say, hey, can you send me the Q-Secure stuff, and that will get it into queue. Otherwise, after this window closes, I'll forget about it. I have a very poor memory. I used my inbox as my reminder.
I would say you have a very good memory based on this call.
Yeah, that's what I would say.
I only remember the things that are important, right? Basically, like I don't remember names, which are important, but I'm more of a visual type of guy. I remember faces more than names.
Me too. So any last questions, or Joe, go ahead.
Go ahead, Ian.
Oh, well, I mean, I just wanted to thank you for this. This has been a very interesting discussion because you covered a lot of areas that I'm interested in. So like that was really valuable. And
yeah, listen, it's always good to meet with like-minded investors and people, and Bonnie has the most interesting network. So thanks, Bonnie, for putting me on here. I'm just, at the end of the day, I'm an entrepreneur. I love to look at companies and deals and, exchange ideas with other smart investors and figure out, okay, what are the winners?
I thank you for giving us this time. So any last parting words of advice?
No, I mean, look, if you want to, interesting, unique deal flow, get some time on my calendar. I'll put down my kind of calendar here as well in the Dropbox or in the thing. And then, feel free to schedule. I'm happy to talk about, my deals or your deals or whatever. Yeah.
Or their newcos.
Yep. Or newcos. All right, guys. Appreciate you guys. I'm going to let you guys. Thank you so much. Have a great day. Thanks, Bonnie.
Thank you, Joe.